Good morning, and welcome to the Nexa Resources fourth quarter and full year 2019 conference call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star then 1 on your telephone keypad. To withdraw your question, please press star then 2. The presenter in this call is Ms. Roberta Varela, Head of Investor Relations. Also joining the call and available for questions are Mr. Tito Martins, CEO of Nexa Resources, and Mr. Rodrigo Menech, CFO of Nexa Resources. Please note this event is being recorded. I would now like to turn the conference over to Ms. Roberta Varela. Please go ahead.
Thank you. Good morning and good afternoon, everyone, and thank you for participating in another Nexa's earnings conference call. Today we'll be talking about our results for the fourth quarter and full year of 2019. Please, let's move to slide 3, where we'll begin our presentation. Nexa is a large-scale, low-cost, integrated zinc producer with a unique position in Latin America. We are strategically located in Brazil and Peru, which is the second largest zinc producer in the world, and where we operate 3 underground mines. We also operate in Peru Cajamarquilla smelter, the largest in the Americas. In Brazil, we operate 2 mines and 2 smelters, and we are developing the Aripuanã project. Located in the Mato Grosso state, Aripuanã is a world-class underground polymetallic mine which will produce zinc, lead, and copper, among other metals. And beyond Aripuanã, we have important strategic projects that are in different stages of maturity, like Magistral, Chalipaito, Pucará, and Hilarion, which should support our strategic organic growth of increasing our capacity on copper and zinc and fully integrate our mine and smelter business. We remain confident in the long-term prospects and market fundamentals of zinc and copper, but the scenario is still challenging. In 2019, commodity prices faced downward pressure due to the volatile economic scenario. Zinc and copper prices decreased 13% and 8% respectively compared to 2018. As a result, Nexa's net revenue of $2.3 billion was 6% lower than 2018. Lower prices were partially offset by higher sales volumes. Production and sales guidance for 2019 were achieved. However, we also faced some setbacks in our operations, primarily in our mining segment, which affected our performance. Adjusted EBITDA, excluding the non-recurring expenses, was $402 million in 2019 compared with $605 million in 2018, which was positively affected by the recognition of a tax credit of $34 million. And we are attentive to this challenging new world and the need to improve the efficiency of our operations and to transform ourselves. And based on that, in 2019, Nexa initiated our operational efficiency program called Nexa Way, which I will comment on the next slide. We will maintain our efforts to build a differentiated, sustainable, and cost-efficient business model, generating value for all our stakeholders. In this context, we'd like also to reinforce our commitment of returning capital to the shareholders. Based on our statutory accounts, we are pleased to announce dividend distribution of $50 million to be paid in March. Moving to next slide. As we mentioned in our third quarter results, the operational efficiency program initiated at the end of the first semester not only aims to reduce our costs, but also aims to structurally improve our business model and to transform our culture. To develop and implement the initiatives of this program, we have the support of external consulting firms. Nexa Way involves all our employees. We are looking for opportunities to improve our operations and our corporate areas, such as commercial, tax, and finance. During 2019, we implemented initiatives that cost us $41 million, and that we expect it will generate a minimum of $120 million in annual and recurring EBITDA by 2021. We trust the operation and culture changes will not only improve our results, but it will also strengthen us as a company, supporting our next growth cycle in this new decade. We believe we are on the right path to building the mining of the future. Moving to the next slide. On slide 5, I will comment on Aripuanã project. Located in Mato Grosso, Brazil, Aripuanã is under development. We invested $124 million in 2019, and we estimate a capex of $220 million for 2020. By the end of fourth quarter, 28% of physical progress was achieved. This is behind our original schedule due to external factors, including weather conditions, upgrade of the public bridge, and a delay in our detailed engineering studies. We are working on a new rebaseline schedule. We are also revising our original ramp-up of 12 months, and we expect to accelerate this period compared to the initial estimates. We do not expect the 3-year production guidance to be affected. A final report is expected during second quarter of 2020. The ramp-up tunnels for the arrest and link ore bodies were concluded, and mine development reached 1.5 thousand meters. In addition, we continue advancing procurement and stockpiling ahead of the 2021 commissioning. We are also contributing to the social development of the local community, and approximately 500 people received professional qualifications in 2019. Of the total number of participants, 52% were women. Moving to the next slide. On slide 6, we will discuss segment results. Beginning with the mining segment, the first graph on the upper left shows zinc production of 83,000 tons in fourth quarter 2019, compared with 103,000 tons in fourth quarter 2018. This decrease was mainly driven by the temporary reduction in vazante processing capacity, resulting from the repair of the trunnion used in the concentration plant, and by lower production in Cerro Lindo. In 2019, zinc production was 361,000 tons, down 3% from 2018 due to lower average zinc grades. Mining net revenue totaled $234 million in fourth quarter 2019, down 18% versus the previous year. This performance was explained by the decrease in production, lower LME zinc and copper prices, and higher benchmark TCs. In 2019, net revenue amounted to $1 billion, a decrease of 14% compared to $1.2 billion in 2018, also affected by the same factors. In respect to our smelting segment, in fourth quarter, metal sales increased by 2% to 162,000 tons, positively affected by the improvement of smelter recovery rates. In 2019, sales volume totaled 621,000 tons, an increase of 1% following production growth. Net revenue for the smelting segment was $460 million in fourth quarter 2019, 2% lower compared to a year ago, mainly due to the decrease in zinc metal prices, partially offset by the year-over-year increase in sales volume. In 2019, smelting net revenue totaled $1.9 billion compared with $2 billion in 2018, also due to lower LME prices. Please let's move to slide 7, where we discuss the mining segment EBITDA. In 2019, adjusted EBITDA totaled $173 million, down 60% year-over-year. This decrease was primarily driven by market-related factors such as lower LME prices and higher treatment charges, with a negative variation impact of $126 million and $65 million respectively, higher G&A expenses due to the increased allocation of corporate expenses to the mining segment, including $23 million related to operation efficiency initiatives, and higher operating costs of $80 million related to development expenses, energy, maintenance, and third-party services. Looking to the graph at the bottom right, we present the global cash cost curve for zinc. We remain well positioned at the end of second quartile, beginning of the third quartile. Moving to the next slide. On this slide, we will comment on our mining segment guidance. In efforts to improve our disclosure, in January 2020, we provide 3-year production guidance by metal and mine. For 2020, zinc production at the mid-range of the guidance should be similar to 2019. The estimated decrease in production in Cerro Lindo should be offset by improved performance at Vazante and Cerro Pasco complex. For 2021, Zinc production is estimated to increase 4% over 2020 and a further 70% into 2022 over 2021 after Aripuanã ramp-up. In addition to the 3-year production guidance, this is the first time we will also provide cash cost guidance. For 2020, we estimate mining average cash cost of 52 cents per pound of zinc sold, as we forecast higher treatment charges and lower LME prices compared to 2019. Let's move on to the next slide. On slide 9, we will discuss the smelting segment EBITDA. In 2019, adjusted EBITDA for the segment totaled $180 million, up 3% against 2018. Higher treatment charges and byproduct credits offset lower metal prices and the increase in costs, including the temporary increase of $18 million related to Nexa weight. Smelting average cash cost was around $1 per pound in 2019, down 18% from 2018. Differently from our mining segment, market-related factors had a positive contribution to our smelter cash cost. This is a good example of the importance of the mining smelting integration, reinforcing our strategic advantage of having smelters in our portfolio. We believe we are well positioned to mitigate risks and capture the opportunities of the commodity cycle. Looking to the graph at the bottom right, we present the global cash cost curve for zinc smelters, and Nexa is positioned at the first quartile of the curve. Let's go to slide 10, please. On this slide, we will comment on our smelting segment guidance. We estimated sales volume increase over the next 3 years, supported by productivity gains driven by the increase in silicate mix feed to the Três Marias smelter, the improvement in secondary mix feed to the Juiz de Fora smelter, and the continuous improvement in our Cajamarquilla operation. Smelter average cash cost is estimated at 90 cents per pound, a decrease of 11% compared to 2019, primarily driven by the expectation of lower concentrated prices and our efforts to improve operational efficiency gains. Let's now move to slide 11, where we discuss CapEx and other operating expenses. In 2019, operation investments amounted to $113 million. For 2020, we estimate a total investment of $94 million, including mineral exploration, project development, technology, and community expenses. In mineral exploration, we continue our efforts to replace and increase mineral reserves and resources, supporting our business growth. Mining activities involve substantial risks, and safety is one of our highest priorities. We believe the use of technology will help us to mitigate those risks, improving our efficiency and making our business safer. We also contribute to the local communities in the countries where we operate. We invest in education, training, and we try to employ and contract local service, supporting their social and economic development. In terms of CapEx, for 2020, we expect to invest $410 million, similar to 2019 amount. We know that most of our expansion-related investments will be in Aripuanã, with estimated CapEx of $220 million. Let's move on to the next page. On slide 12, we present Nexa's free cash flow generation. Starting from our $349 million adjusted EBITDA, which includes the impact of the temporary expenses of $41 million, we had a negative change in working capital of $72 million year over year, driven by an increase in inventory and in recoverable taxes. We spent $270 million in sustaining CapEx and interest paid. As a result, cash flow before expansion projects was negative in $28 million. Non-sustaining CapEx, which includes our expansion projects that will contribute to additional cash generation in the future, amounted to $215 million. During 2019, we also had the acquisition of the Aripuanã minority stake and the payment of dividends related to the fiscal year 2018. As a result, Nexa records a negative cash flow of $334 million. Moving to slide 13. As demonstrated in the upper left graph, our liquidity remains strong, and we continue to report a healthy balance sheet with extended debt profile. At the end of 2019, our current available liquidity was $1.1 billion, which includes our undrawn revolving credit facility of $300 million. The debt breakdown characteristics by source and currency is shown on the lower left side of the page. As of December 31st, the average maturity of our total debt was 5.2 years. On the right side, we see net debt increase as a result of our current cycle of investment and the cash payment of the Aripuanã minority stake acquisition. Our leverage, measured by the ratio net debt to adjusted EBITDA, was 2.3 times as a result of lower EBITDA and increase in net debt. If we exclude the non-recurring expenses from the analysis, net debt stood at 1.96 times. Please, let's move to slide 14. On slide 14, we'll comment on market scenario. Despite some moments of recovery, average zinc price in 2019 decreased by 13% compared to 2018 and ended the year at $1.16 per pound. Short-term prices are still affected by the uncertainties related to the global economy performance and its impact on sector's growth. Refined zinc stocks worldwide maintain their downward trend, and in December, with exchange stocks available for consumption of only a couple of days. On the bottom left, we show a comparison of production between the market estimated in 2017 and 2019. As illustrated, supply projections are usually more optimistic than reality, despite regular operating disruptions. New zinc supplies do not start up as initially forecasted. However, short-term prices are still affected by the uncertainties regarding global GDP growth and U.S. and China trade war, and more recently, the potential negative impact of the coronavirus outbreak. In a scenario where demand is relatively stable and macro scenario is less volatile, zinc prices should reflect market fundamentals, improving from current levels. Moving to our final slide, as earlier discussed, we initiated an Nexa Way program to enhance our operational efficiency and transform our culture, strengthening us as a company, supporting our future growth. During 2020, we will continue to advance with the program, and as a result, our performance should better reflect the estimated gains. Aripuanã is one of our main priorities, and for the year, we expect to invest $220 million to continue developing the project. Our balance sheet has been prepared to support our investment cycle, even in a diverse market scenario. We expect to continue to deliver on guidance, and the continuous improvement of zinc recovery rate on our smelters should support our volume growth. And to maintain the market regular update in order to better evaluate our potential value creation, we plan on filing the preliminary economic assessment report on Hilarion project within the first quarter. Engineering studies for our Magistral Copper project will continue to progress, and a new technical report will be re-evaluated after the conclusion of FEL 3. Our Chalipaco and Pucahaha projects are at pre-feasibility stage, and we are working some milestones to advance to the next engineering study phase. Late February, we also expect to publish our updated mineral reserves and resource report. Thank you all for your time, and let's move on to the Q&A session.
We will now begin the question and answer session. To ask a question, you may press star then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then 2. At this time, we will pause momentarily to assemble our roster. Our first question comes from Carlos de Alba with Morgan Stanley. Please go ahead.
Yeah, good morning. Thank you very much. So the first question is on the 120 million benefit from the several initiatives that you guys are implementing to improve EBITDA. Can you talk a little bit more about how do you see this progression to that level? I think you're guided to 120 million incremental annualized EBITDA by 2021. But if you could give us some comments around the ramp up to get to that level, as well as the cost that you believe you will incur in 2020, which was mentioned in the press release. But if you have a number or even a range, that would be very useful. As well as just to confirm, given that the success fee was paid upfront, so I just wanted to confirm that if you get to the level of 120 million, which I think is the target or above, would incremental success fees related to these initiatives will have to be paid to the consultants? A long-winded question, but that's one topic. And the second topic I would like to explore is if you have any further comments beyond those presented in the release around the Magistral project. What were the changes, if you can mention, what were the changes in the engineering studies that you faced? Thank you.
Hi, thank you for your questions, Carlos. This is Tito speaking. About the $120 million, I would say that you will see it spread it out along the year. We're expecting to have it being added to our cash generation along the time. Why is that? Because there are a group of almost 300 initiatives that we are carrying on right now that will generate those results. And those initiatives are related to the operations and to different procedures to operate, different corporate procedures that will be made. So I'm not expecting any, let's see, difference along the year in terms of if there is one specific month that the cash generation will be higher or not. It will be embedded in the numbers along the year. In terms of the fees, as we said in the earnings release and also last year when we had the third quarter, those fees applies as success fee on the results as a result of the increase in cash generation. There will be some along the year. I cannot provide a number now because it will depend on when the benefits will be enjoyed. But I would guess that it also will be along the year, and the impact will be diluted by the additional cash generation. In terms of the other question, I'm going to pass to Rodrigo. You want to answer you?
Hi, Carlos. It's Rodrigo here. About Magistral, the only thing is that we had an estimation to disclose a technical report now in the beginning of the year. But as we will proceed with the FEL 3, which is feasibility study until the end of the year, we've thought it would be much more complete to disclose the full report once we finalize the feasibility study. So that's the only difference. The project remains being studied as scheduled and as mentioned in the previous releases.
Right. Thank you very much, Tito and Rodrigo.
Thank you.
Our next question comes from Orest Wowkodaw with Scotiabank. Please go ahead.
Hi, good morning. Could you please clarify what's happening with the Aripuanã development? I find the language in the release a little bit confusing because you've disclosed that there is a delay in development, but at the same time, you don't think there's any impact to the 3-year production guidance. Can you maybe give us a bit of color on what's going on and why it's not, if there's a delay, why you don't think it's going to impact the production? Thank you.
Hello, Orest. Thanks for the question. Basically, the following is happening. When we provided guidance, we were very conservative. If you compare the guidance with the technical report, we were already being conservative. That's why we think that there will be no impact. On the other hand, there will be the delay, but we are also working on in advancing the ramp up. Originally, the ramp up was scheduled to be in 12 months. We believe that we can do it in between 6 and 9 months. That's why. What's going on over there? Every 3 to 4 years, one of the bridges that gives us access to the site goes through an upgrade, some construction, refurbishment. So what happened this year is that when they do that, they have a parallel bridge that is built just during the period of the construction. what happened is it rained a lot there, which caused the destruction of this stair bridge. And with that, those renovations, they took longer than expected, actually more than a month than expected. Besides that, we had also a problem with some of the engineering package. They were a little bit delayed, which caused us actually to reassess and see how long actually we will have the project impacted. We should have this probably in the second quartile. But once more, I want to restate that we are not expecting an impact in the production in 21 because of this.
The project is evolving well with this concern, but evolving well, and we already have 28% of physical evolution.
Yeah, we already have 1,500 people at the site right now. So things are going very well in terms of execution.
Okay, thank you for that. And then as a follow-up, Tito, just on the consulting investment that you're making, I'm a little surprised by the magnitude of the investment that you're making. And I think you mentioned last quarter it's a success-based fee. So I'm having trouble understanding why the fees are so large now before you actually realize the savings.
It's a technical thing. Let me try to explain. What happened is you generate the initiatives that will result in gains. When those initiatives are validated, and they are validated based on technical procedures, technical approach, you pay the fee. The consultant doesn't take the risk. So we are now in the process of implementing those initiatives, and then we will see the gains. We've seen some already. That's why I'm saying that. And I'm seeing the same approach done in other companies. So we are following up those. We are carrying on those initiatives and expecting to have the additional cash, the additional generation happening along to 2020.
Thanks, Tito.
Thank you.
Again, if you'd like to ask a question, please press star then one. Our next question comes from Alex Hacking with Citi. Please go ahead.
Yeah, good morning. I just wanted to follow up on the 120 million. I'm not sure if you can answer this question, but how much of that should we expect to see coming through COGS and SG&A, and how much of that is going to be showing up in revenue through improved recoveries and things like that?
Yeah, actually, I can't answer that right now. Of course, there will be impact in some of them, in the SG&A and other accounts, but I cannot be precise right now.
Once we appropriate this throughout the year, Alex, we will be providing this in our earnings release.
Yeah, thanks. It would be helpful, just so that we can track it. You know, given the amount of fees that have been paid, it seems like we should be kind of auditing, like, you know, the benefits. And then just one follow-up. Could you just remind us the cost guidance for Aripuanã and how we should, I guess, how we should think about the cadence of that? Like, when would, you know, I guess, what is the steady state cost guidance, and what year would you expect to reach that? Thanks.
Hi, Alex. This is Roberta. Remember that for cash cost guidance, we only provide for the 2021. So we didn't provide the Aripuanã and update. But if you consider what we provide in our report back in 2018, it was like 14 cents per pound.
Okay, perfect.
So this is the number that we have. Okay.
Okay, so overall, it's going to reduce your average cost, right?
Yes, that's the idea in terms of what we have when we are analyzing the projects. We have projects in the first and second quartile of the cash cost curve. That's one of the assumptions that we have for future projects.
Okay, thank you.
Our next question comes from Diego Torres with MCC. Please go ahead.
Thank you for the call. Just a question regarding the dividend policy. What is the dividend policy going forward? And also in terms of the presentation, I would like to text one number that I couldn't match. At the beginning, you mentioned that the cash dividend payment of 50 million, that is on page 3, I guess. And at the end, you mentioned about the the cash flow in 2019, there's a dividends of 113. So I would like to, I don't understand the difference between the two numbers. Thank you.
Okay, Diego, thank you for the question. First of all, let me answer the easier one. When you say dividends and the cash flow for 2019, that we declared and paid approximately $70 million of dividends from Nexa Resources SA in Luxembourg, right? But we had internal dividend payments between Nexa Peru and the other, going the cash upwards to Nexa Cajamarquilla and then to Nexa Luxembourg. In Nexa Peru, we are a listed company. We have 16% in the market, so we pay the proportional dividend to the minority shareholders on $200 million, so it was approximately the difference that you see there, right? The second thing is we disclosed approximately $50 million of dividends. In the press release, you have the accurate number per share. I don't have it in front of me right now, but it's approximately 0.37 cents. It's 37 cents per share. So when you get to the total amount of shares, you're going to get to approximately $50 million. Is that clear?
Okay, thank you. Yes. And regarding the dividend policy going forward?
Oh, sorry, I was missing that one. Our policy remains the same. We have a dividend policy that states that we'll pay a minimum dividend of 2% on the average market capitalization in the past 12 months. The policy remains the same.
Okay, thank you.
Thank you.
Our next question comes from Lucas Yang with J.P. Morgan. Please go ahead.
Hi, good morning. Very brief one. Can you give an update on the Cajamarquilla Jarosite conversion project? Is this going to happen this year? If not, when? If it happen at all? Thank you.
Thank you for the question. Yes, it will happen. We are not sure when it's going to be along the year, but we are reassessing, as we said in our press release, we are reassessing the whole project, also talking with the contractors and equipment suppliers in order to rearrange the schedule. We should be news about that by the second quarter. Our intention is to move on with the project along the year, but of course will depend on these discussions with the contractors. But the idea is to move on with this along to 2020. Thank you.
And the recovery rates, they should remain the same from 94% to 97%, or would that change as well?
The idea, it's interesting, good question. We were recovering something around 91, 92%. And last year, the performance was much better than before, was around 94. And the 3% still applies. So, which means that after the project, we should be able to go up to 97%.
Okay, thank you.
Thank you.
Our next question is a follow-up from Carlos de Alba with Morgan Stanley. Please go ahead.
Great, thank you. So just could you comment about the trends that you have seen in the premiums that you realize in your different markets, particularly Brazil is probably a little bit more of a unique situation. Could you comment or talk about how those are moving? That'll be very useful. Your realized prices came above what we expected, so perhaps that is the reason. And then finally on the intercompany loan with Luxembourg, can you maybe, Rodrigo, remind us what are the plans for that during 2020?
Carlos, I'm not sure if I understood the second question.
The second question is the intercompany loan that you have with the Luxembourg holding company. What are the plans for that loan in 2020?
Okay, let's talk about the premiums first. We actually have not seen a big change in the premiums along the year. I mean, the premiums we are having in Latin America are pretty much the same we had in the year before. Actually, if you compare our premiums with other continents, they have not changed much, even when the market condition is not favorable. And I cannot explain why your model did not price the same as we execute. There was nothing new on our
Nothing
side.
special, yeah.
No, not at all. Not at all.
Carlos, about the intercompany loan, we have been reducing this exposure, which is internal exposure. Actually, the only practical effect the intercompany loan has on the figures you see there is that on a consolidated basis, any currency devaluation impacts the net income there, right? In any case, we have reduced this to below $200 million, and throughout the year, we'll evaluate the best way to treat it and keep reducing it. As you know, the Brazilian balance sheet is the one being used now for the investment on Aripuanã. So there are some peculiarities in terms of when is the best time to keep reducing it. But don't worry, the intention is to reduce the dollar exposure in the Brazilian balance sheet.
Great. Thanks again.
Thank you.
You're welcome.
Our next question comes from Oscar Cabrera with CIBC. Please go ahead.
Thank you, operator, and good morning or afternoon, guys. I apologize. I came in late into the call, so if you already answered this question, I can just go back to the transcripts. You have had what appears to be a very successful exploration program for the second half of 2019. I'm just wondering if you feel confident you can meet your target of, if I remember correctly, increasing your reserves from 7 to 12 years. That would be the first question. And a follow-up to that is, based on what you've seen so far and in completing your feasibility studies, do you still have the same priorities in terms of development projects after you finish Aripuanã? Thank you.
Oscar, thank you for your question. Exploration. Yes, we have a very aggressive program. If you look at the numbers we released from the guidance, it's a little bit lower than the number for last year. We still intend to reach the 12 years, but we are slowing down a little bit given the price volatility, zinc price volatility. So we wanted to be more careful about expenses along 2020. It was even before the coronavirus issue, but the plans are actually to reach the targets, the previous targets. In terms of the projects, yes, we intend to move on with them. After Aripuanã, we should have a decision to make about Magistral. As was said before, we will have Magistral feasibility study or FEL 3 ready on the second half of this year. So we have in between the second half and the first half of next year to decide about the execution of the project. And if everything goes as expected in terms of comfort, maturity of the project, expected return, and so we should approve it and move on with that, probably starting in the second half of 21. After that, we have in the pipeline Puca, which is right now is going under metallurgical review. We decided to be more cautious about the project, and actually it's helping to move faster Magistral. And after that, we have Hilarion and Chalipaco, as you know. So the pipeline is still there. We are confident that we can go for those projects.
Okay, thank you, Tito. With just taking the if you were to start Magistral in the second half of 2021, do we then lower expectations for mineral exploration? I think you're spending about $60 million in round numbers in 2020. Would that expenditure decline, or would you just keep it at the same level to get your research to 12 years?
Specifically, it doesn't affect Magistral at all.
No, but I mean just in general.
No, in general, the slight reduction we have in exploration will slow down the increase in life of mine of some of our operations. But doesn't mean that we are not pursuing to reach the 12 years resource availability. Okay?
Thank you.
Thank you.
This concludes our question and answer session. Now we will hand over to Tito for his final remarks. Mr. Martins, please go ahead.
Thank you. I would like to thank you all for being with us in the call. I would like to also to reinforce our commitment with our plans. As said before, we are moving on with Aripuanã. Aripuanã execution is going very well. Unfortunately, we had this setback, but we are confident that with the reduction in the ramp-up time, we can actually move ahead with the production 21. The company had some issues last year, but we believe we are back on track, expecting to have a very good year, despite the problems we are seeing around the world with the coronavirus and issues about trading and so. We are confident we can accomplish what we intend to. And we have to remember one thing. Zinc price are lower than what we were expecting, but we are not seeing any change in the fundamentals. Just to give an example, at the very beginning of the year, zinc prices were around 2,400, when everybody was saying that they should be lower than that. And they just came down because of the coronavirus crisis. So we are still confident in the zinc market. And we are enjoying one thing that a few people realize. The fact that we prevail in smelting over mining, the TCs being the level they are today, they benefit us as a net result. Once more, thank you very much, and anything you need will be available to provide the proper information. Have a good day.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.